Chris, thank you very much for coming to Paris and speak at this conference. We don't often have a treasurer speaking at this risk management conference. What's your view on the role of the treasurer going forward in the risk management landscape?
Well, thanks for inviting me. I think there are a lot of different ways to structure treasury. And I think having treasury sit within risk at Deutsche Bank has been the right structure at the right time, and we've gotten a lot of leverage out of it. I also think we've gotten probably nearly as much leverage out of the strong global markets connections that we've got. I certainly think that we're going to continue to have strong benefits working with our market risk people, our credit risk people, and having Hugo sponsorship of our group over the next few quarters. Right now, Treasury has been all about risk. And I don't know who foresaw that in 2006 when they put this together at Deutsche Bank. And I don't know how the importance of risk is going to evolve. The Treasury right now is very much about risk. Whether that would be the case in 2010, 11, or 12, I think it remains to be seen. But I think at this point we feel like we have a proven model.
Right.
And I like to get the perspectives of Hugo, and in particular of the market risk and credit risk people. And I think they are placing value on the Treasury perspective.
Right.
And I think it's been a collective early warning system for us, enhanced by the global markets relationship.
Okay, no, thanks. Well, clearly, Deutsche has done pretty well out of the crisis so far. Others have done less well. What do you think the main lessons are that the industry has learned over the last year?
I think risk is being viewed in an entire new lens. People have literally lost amounts of money that they could not possibly ever conceived of losing or modeled losing. I think securitization and originate to distribute are wonderful concepts, but I think they got stretched probably beyond natural extremes. We're paying a price for that. I think as an industry we all brought more assets into the house on we're buying to syndicate as opposed to buying to own. Then has turned out to be healthy. And I think the market risk, not just the credit risk for the first quarter or the first 3 or 4 quarters pending syndication, but the actual market risk of those positions is going to attract a lot more attention. And I think very importantly, I think we're seeing example after example after example across the industry that the governance framework is not as strong as it's supposed to be. Or maybe we've got a great governance framework as an industry and as individual banks, but in practice, the governance side of the house falls down versus the front office, and we need to make sure that there's enough control and enough check and balance in that relationship.
Okay, thanks. Final question. Everybody agrees now that this is a crisis here to stay for a while. What is your own prediction? Is it 3 years, 4 years? Is it more?
Well, I have a hard time looking more than a few quarters in advance, but I definitely feel like it'll be with us at least a few more quarters. I think it could be with us potentially a lot longer than just a few quarters, a few more quarters. I think there is so much credit being siphoned out of the system that I really wonder how the global economy can adapt to that, cope with that. And I think that some of the stresses that are showing up in the global economy may be exacerbated, as Professor Altman illustrated, by the lack of credit availability, which may push a lot of companies and a lot of individuals into default that wouldn't happen under somewhat less severe circumstance.
Right. Chris, thank you very much for your time.
Thank you.
Cheers.
Very much enjoyed it.